Can you legally pay your own kid and pay zero taxes on it? Yes, $16,100 to be exact. That's what you can pay them this year with zero federal income tax owed, not a loophole, not a gray area. A rule sitting right there in the tax code. Is this actually legal, or is this one of those tax hack things that gets you audited? Completely legal. It's the standard deduction. Every dependent gets one. For 2026, it's $16,100. If your kid earns wages up to that number, they owe zero federal income tax. And quick, honest note while we're here, this is education, not personalized tax advice for your situation. More on that at the end. The IRS didn't accidentally leave this door open. They designed it this way. The catch, and it's a real one, is that the work has to be legitimate. So what actually counts as legitimate work? Can you pay your kid to take out the trash? No, that's a chore. Chores are allowances. Allowances aren't wages. Legitimate work means real economic value. Filing receipts, updating your website, organizing inventory, cleaning your rental property between tenants, babysitting for the neighbor. If you'd pay a stranger to do it, you can pay your kid to do it. Here's the difference in practice. I know a guy who runs a landscaping business. He pays his 13-year-old to sweep the garage floor after every job. Real work, legitimate part of the business. His neighbor tried paying his kid for vacuuming and dishes instead. That's not a wage, that's an allowance, and the IRS has seen that exact move a million times. They'll disallow it the second it shows up in an audit. How much can you actually pay without raising red flags? Up to the full $16,100, but it has to be reasonable pay, matched to what you'd pay a stranger for the same work. $50 an hour for website management is reasonable if that's the market rate. $16,000 to sharpen a pencil is not. Do you have to file a return for your kid if they earn under that amount? No. But you do still have to file the business paperwork, a W-4, a W-2, and your standard employer payroll filings. This has to run through real payroll, not a Venmo with no record. Skip the paperwork and you lose the deduction entirely, and a cash payment with nothing written down can look like unreported income if you get audited. Let me walk you through what this looks like on paper. Say you run a photography business, sole proprietor. You hire your 14-year-old 10 hours a month after school, organizing and tagging photo files. You write a check for $200 a month, $2,400 a year. You record it as contract labor, issue a W-2 at year end. Your business deducts it. She owes zero tax on it. Start to finish, that's the entire cycle. Does the Kiddie tax touch any of this? No, and this is the most misunderstood piece of the whole strategy. Kiddie tax only applies to unearned income, dividends, capital gains, interest. Earned income gets the standard deduction instead, $16,100 tax-free, completely untouched by Kiddie tax rules. Gifting your kid stock to dodge taxes doesn't work. Paying them real wages for real work does. What's the biggest mistake people make trying this? Two traps. The chore trap. Vacuuming isn't a business expense. The work has to be ordinary and necessary for your business, or it doesn't survive an audit. And the cash trap. Pay in cash with no paperwork and you haven't saved anything. You've just lost the deduction and created a record-keeping mess. What if you run this as an S-corporation instead? This is where people accidentally light thousands of dollars on fire, and almost every video on this topic gets it wrong. Sole proprietor, or a partnership where both partners are the kid's parents. You're fully exempt from Social Security and Medicare tax on that wage, a 15.3% savings on top of the income tax savings. Run an S-Corp instead, and that exemption disappears completely. Why does the structure matter that much? Because of how the IRS defines employer. In a sole proprietorship, there's no legal separation between you and the business. When you pay your kid, you're paying them as yourself, and the IRS calls that a family wage. An S-corporation is a separate legal entity. When it pays your kid, the corporation is the employer, not you. And the exemption specifically applies to parents employing their children, not corporations doing it. Pay your kid $10,000 a year as a sole proprietor, you save $1,530 in FICA. Same wage through an S-Corp, that $1,530 goes to the IRS instead. Same kid, same work, different checkbox. What if my kid is under 14? Can I still do this? Yes. There's no minimum age tied to the standard deduction itself. The only age line that matters here is the FICA exemption, which covers kids under 18. 12, 10, even younger. As long as the work is real and the pay is reasonable, it holds up. So is this just about saving a few bucks on taxes? Not even close. This opens a door most parents don't know exists. Earned income is the only key that unlocks a Roth IRA for your kid. No job, no Roth. Pay them through your business and that door swings open. Say your 12-year-old earns $7,500 a year, enough to max a Roth. From age 12 through 18, 7 years of contributions, then never touches it again. At a conservative 6% return, that's roughly $974,000 by 65. At a standard 7%, closer to $1.5 million. I'm giving you both numbers on purpose. Anyone who hands you one flashy figure decades out is skipping the part where the assumption matters more than the headline. And every dollar that comes out at 65 is completely tax-free, so you've shifted business income at a 0 tax rate today and funded a tax-free retirement at the same time. What actually needs to be on paper for this to hold up? 4 things. A written job description. A paragraph is enough. Actual timesheets, your kid can track their own hours. A real W-4 and W-2 filed properly. And a real payment trail, direct deposit or a check, never cash. Never a Venmo memo that says allowance. Skip any one of those and you don't have a tax strategy, you have an audit risk with your kid's name attached to it. Is this worth doing for one kid, one small job? I think so. The $16,100 deduction doesn't shrink because the job is small and the Roth door doesn't stay shut because the income is modest. An afternoon of setup, roughly an hour a quarter to maintain, that's a strong return for the time. Before you go, the full disclaimer I promised. I'm not a tax advisor, just a parent who read the actual IRS publication so you don't have to start from zero. Every business structure and state's rules differ, so talk to a real CPA before you set this up. Worth sticking around for more of this kind of thing? I think so. Next time we're walking through exactly how to set up the payroll side of this, line by line, so the paperwork stops being the part that makes people quit. Go check what your kid's actual worth is on paper. It might be more than you think.